Thank you all for being here. There's a Chinese curse that says, may you live in interesting times. And I think when it comes to investing in mobility and the business of building the businesses of future mobility, the times could not be more interesting. On the one hand, as we see here and in many other places, the opportunities are seemingly endless. On the other hand, there are lots of challenges as well. We see big investments struggling to deliver profits at companies like Uber, Lyft, and Tesla. We have autonomous vehicles. The timelines are extending. It turns out to be a more challenging problem, and that, of course, creates challenges on the investment side and drives consolidation. And then we've had newer trends with micromobility also growing, having a huge impact, but having challenging fundamental business challenges. So I want to start with autonomous vehicles, and particularly sort of the perspective of the OEMs that are really doing the majority of investing in autonomous vehicle technology. Mr. Schloss. Neil. How are OEMs in particular handling, although there are tier ones in the space, how are they handling this challenge of sort of longer timelines for autonomous vehicles? Obviously, that affects return on investment, and yet these investments remain huge. In fact, maybe even require more investment than originally envisioned. How are they handling this?
Yeah, I think a couple things. One is this is not new space. Long-term investments, long product cycles are something that the OEs have historically done a lot of. This one is new. It obviously has a lot of characteristics to it that are different than a traditional vehicle program or a vehicle technology. You clearly have seen an industry where firms are partnering up. You've got GM, Cruise, Honda, SoftBank, you've got Ford, VW, and Argo. You've got the Germans partnering up. You've got the Chinese and their consortiums. And so folks are really trying to find the solution together. And that's sort of it's not a new concept, but from a standpoint of something as important as autonomous vehicles are going to be to the industry, the partnering up is major. The capital is being shared, which is a good thing. Resources, there's a shortage. If everybody was doing this on their own, you can only imagine the drain on resources that would be, and to the highest bidder, people would have to be moving around. And so the sharing part of this is actually a really good thing for the industry from the standpoint of sharing of capital, sharing of technology. Unclear the winners and losers, and that goes all the way through the supply chain from the standpoint of how folks will fit in to the stack, whether it's a full stack or a partial stack. So there's a lot of unknowns still, and so the ability to do it with others and partner with others, I think from the long-term sustainability of the industry and autonomous vehicles is a good thing.
And Mr. Behrendt, this pooling of resources, does this have implications for sort of the competitive advantage of some of these products, these technologies rather? If two companies like Ford and Volkswagen decide to invest in the same AV technology stack, or BMW and Mercedes, does that imply that there aren't really competitive advantages in these, or is it more being driven by necessity?
You can call me Marcus too. I do think that the partnerships in the automotive industry are very common. They always have been there. Now we talk a little bit more about the new partnerships that are coming up because it's a new mix. It's new partners in the field, partnering with old players. But I think you can dissect the full stack basically into different levels. And the partnership that BMW has started and Mercedes has joined together also with Mobileye and Intel in the beginning was more for creating an open source platform from which everybody then individualizes their own experience. So it's more about also standardization. So many of these things, so if we have a ton of autonomous cars, they have to somehow interact with each other and they have to have common rules. And on that portion, I think there is an underlying factor that will be very common, and the above is then the differentiation.
And Ms. Dar, are there specific areas, and maybe not even autonomous, I mean, I know that's what we're focused at the moment, but feel free to take this in other directions as well, where the overinvestment has really become more of a problem than other areas, where there is going to be more sort of consolidation than other areas?
Yes, certainly there are tons of technologies that need to go into the autonomous vehicles, and some of them are overinvested while others are underinvested. I don't know, there are maybe 50, 60 LiDAR companies. I think everyone here in the crowd either invested in a LiDAR company or is part of a LiDAR company. And in the end, we, of course, are going to see only a handful of LiDAR companies that are going to really provide products to the industry. And on the other hand, if we look on sensors, maybe radars or other types of sensors, still needs to innovate, still could bring a lot of value, and there may be place for investment. And if we go across different technologies, we probably can see technologies where are maybe underinvested yet and could enjoy with much more innovation jumping in. But if we go maybe beyond autonomous cars, and of course autonomous, everyone speaks about autonomous, but this is just one of the user experiences that we're going to have. I'm still going into a car that's designed very much the same way like my parents and even grandparents went into. It's a car for a family of 4 people. Maybe we should design cars that are flexible or modular and can change, you know, to one person at weekdays, couples in the evenings, and families in the weekends. The whole interior experience, it doesn't matter if I'm a driver or a passenger, it's still very, very much, you know, we're sitting facing the road, you know, in the same way, doing basically the same thing, you know, looking at the windows. Maybe this should have a lot of change, you know, our interface to the road, the wheels are the same. We have the same type of wheels for a long, long time. Of course, there is a lot of innovation going there, but maybe the interface to the road should be different. There are so many other, you know, mind-blowing and open opportunities to change the car industry and to differentiate in the future. And these places are really a kind of a virgin islands.
I mean, is that kind of a challenge, given that OEMs and not startups are the ones who are determining sort of the product design in the future?
No, absolutely not. OEMs are, you know, heading the innovation. Of course, I wouldn't say OEMs, they know the customers, they know the habits, they're heading innovation. But it's opportunities for very large consumer electronics platforms like Samsung to maybe come with maybe a little bit different way of thinking. You know, we're very much focused on the user experience with our mobile phones and our consumer home appliances. Maybe this could make our car experience a little bit different.
So I want to ask Mr. Escrib about what I think may be an area where there's perhaps underinvestment. But before I get there, really quickly, does anybody else see overinvestment in an area other than sensors? I feel like that's an answer we hear a lot. Does anyone want to take a shot at something a little hotter take? No?
You look around the room and you walk outside and you sort of count the number of businesses that are starting or in process across the entire industry, and you have to say that there's too many in many fronts. But I think at this point in many of these technologies, we don't have a full vision of what is right and what's not right, or what's going to work and what's not going to work, what can integrate, what can't integrate. And so the fact that we have a lot is actually something I think is a good, because we are going to be able to test these things out. We are going to be able to build data, and the data is going to give us a lot of insight into the winners and losers. And so even though sensors is the obvious one that everybody, the media and everybody seems to pick on because it's hardware, it sits on top of the vehicle, it spins, right? And there's been issues on sizing, there's been issues on packaging. The AI side, the machine learning side, the chip side, these are all things that are out there that are going to be needed for everything to work right together and to be integrated together. And we just don't know at this point. You know, so for all of you out there with booths out there, keep going, because we need the tech, we need it to work, and we don't yet know exactly which is going to fit in with which strategy.
Yeah, well, I certainly don't think you can start a startup without, you know, being at least prepared to take some risks, right? But to turn to you, Mr. Escrib, So you primarily work with suppliers and in the aftermarket in particular, and I feel like as I talk to particularly companies in the autonomous vehicle space, it seems that as Mr. Schloss is saying, Neil, sorry, they're discovering things all the time about sort of how this actually works, and it seems like one of the things that they're discovering is that sort of maintenance and service part of it. It turns out to be a big challenge, and there's been a lot of focus on just the driving, making a car drive. So what are the opportunities? Is service and maintenance, is that part of the autonomous vehicle picture still one where there's maybe more opportunity than people realize, and sort of what are some of those opportunities?
So the autonomous vehicle for us, Nexus, we are an alliance of distributors that ship approximately $30 billion of parts to maintain your cars around the world to the workshop. That's our daily life. Now, the autonomous vehicle is fairly far from our environment at this stage. There are not so many workshops that are ready for maintaining or taking care of an autonomous car at this stage. So we are clearly a bit far from that. This being said, our business, which is a fairly traditional business, from a factory to the workshop, it goes through a number of traditional levels, is probably going to change thanks to smart mobility. And that's where, and that's the reason why we're here, is because we see lots of efficiency and we see the customer experience also being improved, thanks to some companies that are in the room here and some companies that are behind the wall. And that's basically how we look at smart mobility today. So I would say we are involved already with certain manufacturers on getting certain workshops around the world ready for the autonomous car, because it's a different type of car to maintain and to take care of. But it's, for the moment, seen as a niche car park, I would say, an upcoming niche car park compared to, the massive car park that we have to deal with on a daily basis.
One of the issues looking at sort of the investment space seems to be, and some of the challenging instances that I mentioned at the beginning of the panel, seem to come from, to my just my perspective, and feel free to challenge this or correct me, but it does seem like the venture capital environment does seem to really emphasize growth, and like revenue growth in particular, sometimes at the expense of like solid unit economics. And oftentimes there's a perception that profitability is something that can just be sort of a switch can be flipped whenever needed. And I think this seems to me like a really important issue in mobility investing. So let's start with Mr. Barrett. I kind of would like to get sort of all of you engaged in this particular topic, because I think it applies to all of us.
So the underlying thesis, if I understood this right, is that venture is looking always for fast growth, and that is true. So not every development is maybe a venture case. So there's some solid developments of technologies that that shouldn't be financed through venture, that should finance themselves differently, just not to come to that problem that scaling, blitz scaling, as some of them say, is the most important part. That said, though, I think the automotive space is so big, the mobility space is so big, that many of the ideas and also in the sensor space or anywhere else, many of the startups are actually having the potential to scale in that market because it's just so large.
If I may, I would like to add that there may be a difference between financial investors and strategic investors. While a financial investor, they have a lifetime of the fund and they really need to show the returns coming at a certain period, etc., and they're putting a lot of emphasis on growth. Maybe they should also put emphasis on profitability. I think that strategic investors are having kind of more balance between a financial outlook on the company. Still, the company needs to be worthy for financial investors to go in. They need to have the right team, the ability to execute on time, the ability to put in their technology. But we also look more on a strategic angle and whether we can collaborate with the company, whether they have a true technology, a true product that would actually help us to bring our products to the market.
Coming on to the aftermarket again, I would say that we are in a very traditional industry that is rapidly changing now for the past 10 years. The reason why we have decided to invest in the Israeli ecosystem through a fund called Mobilion that is starting this year is simply because we want innovation to be close to us. You know, we are experts of this business, and we are not ready to leave the second wave of innovation to Google, Microsoft, etc. We think that we have to do it. We'll leave space to the others, no problem, but we have a role to play, and that's to participate to the next level of innovation that will be brought to the aftermarket globally. So that's the reason why we have chosen this ecosystem and why we will invest 80% of our, I would say, funding in the Israeli ecosystem.
I'm sorry, what percent?
80%.
Goodness.
Yeah, I think the only thing I would add is this is, from an OE perspective, from a supplier's perspective, the revenue growth that you're talking about, the VC space, is really about valuations, where many of the companies that are out there dealing with each of these businesses is really focused on the product, and they need the product. And valuations are nice, and obviously you guys are in this, or the startups are in this in part because of the valuation and the wealth creation. But in the end, the industry to survive needs the product. And that's more about the product design. Does it work? Is it functional? Can it be produced at scale? Can it fit in and be integrated into the rest of the stack? Less about valuation, more about product. And so when you think about how companies invest, it's more about the product, does it work, less about valuation, less about revenue growth. And so I think there's a disconnect a little bit from a standpoint of who's actually wants to work with the companies, wants to buy the product versus what the company could sell for, either in a secondary or a public market.
I want to chime in a little bit with Samsung here because we have some common investments together. And maybe for all the startups also here in the room, getting together with corporate VCs is always, it could be a challenge, but it can have the benefits. And the benefits, I think, are what you just named. We have at BMW 10,000 engineers in research and development back home in the manufacturing, about the same number of people that you can draw upon that you can grow with, right? So similar for Samsung and other corporate investors. But still, valuation, I think, cannot be left out of the game because otherwise it's not the real venture game anymore. So BMW iVentures is very valuation driven in that piece, saying that we would only invest where there's actually a venture case, back to my first point. And I think only if we play all the rules correctly, then this will be a successful ecosystem that actually, and it has been proven, it has been a successful ecosystem in the past, but it only continues to be one if you play by those rules in the venture.
Yeah. So Mr. Escribe mentioned he's spending 80% in Israel. That is a very large allocation. Can you just tell us why? I mean, you sort of mentioned, but what is it in Israel specifically? What do the startups here have that we don't have, for example, back in Silicon Valley?
So as we told you, we are very aftermarket and service focused, okay? And we have done our job as well around the world, and based on the benchmarks that we have made, we found in Israel the appetite to feed us as a strategic investor with innovation that would be service oriented. So we've had cases and multiple cases, and based on those cases, we have decided to invest specifically on this ecosystem. Of course, we are a Swiss-based company, so geographically we are a bit closer from some other regions of the world, and this brings some practicalities, but more fundamentally, it's in this country that we have found the appetite and the skills to drive the next level of services that the aftermarket needs for the future. So and that's the reason why we have put our focus here.
So, Ms. Adar, you've a slightly smaller allocation, but also a relatively large part of Samsung Catalyst Fund is invested here. Share your perspective.
Yes, of course. First of all, I would like to thank you for the perspective of Israeli companies. It's very encouraging. So at Samsung Catalyst Fund, we're a global fund. We invest, globally in best of breed in any domain, in any country, mainly in the US, Europe, and Israel. But, the outlook is really global to invest in the excellent technologies. But still, a quarter of Samsung Catalyst Fund investments were done in Israel. And I think that there are a few reasons, being born in and raised up here, is that Israeli companies many times are daring to take a very early move into new emerging domains. Already 4 or 5 years ago, we saw several companies, new entrants to the automotive, either pivoting from other markets like e-commerce or smart cities going into automotive, or just building a startup that would address automotive. That was very early on, if you think about when most of the world started to see the crowds going into automotive. And this sometimes gives a year or two of advance. Also in Israel, in terms of necessity, we have a very, very developed defense industry, which has very good ties with academy. And some of the domains like sensors and compute and AI and computer vision, they all come from this defense academy, very long term of defending Israel. So that's another point that really helped with coming early to automotive domain.
Maybe I add in too, BMW Ventures has its dedicated fund, and we have 3 regions in the world where we invest. So in Europe, apparently, because we're a European company, we invest in the US and we invest in Israel. And that's the entire scope. And that puts you right in the bucket there with the other big nations that are in that space. And that's due to the ecosystem that we find here. It's being creative and being driven by so many other.
Yeah. So we've heard a lot about the great things about Israel, but there's a lot of, and the startup ecosystem here, there's a lot of young founders here, and you all are some very experienced investors, very influential investors. I was hoping that we could spend a little bit of the sort of last few minutes of our panel here discussing, sort of sharing some advice. What is your advice to the people with their startups just outside the doors here, and hopefully a number of them still joining us here. Do you want to start?
I can start if you wish. First, I'd like to insist on one thing, is that we have decided to invest in Israel, as I said, 80% of our assets, and it's maybe surprising you. But when I say we, it's a community of strategic investors coming from the business. And I think that this is definitely providing lots of comfort for the startups in the room or the startups behind the wall, is that by joining, I would say, our fund, definitely the comfort that you get is enormous, because we are there, of course, as well, to validate the market feasibilities and to deploy commercially in 135 countries, which is where Nexus is based, the business that the Israeli startups are ready to launch. So think that when you look at an investor, of course, you talked about financial investors, strategic investors, in the aftermarket, which is very specific, could be seen as niche by lots of you. It's at the end a huge market of $700 billion globally, and being in the hands of strategic investors is a plus. The second thing I'd like to say is that the automotive industry this year is obviously going through some challenging times. And it's maybe as well the right time, for the ones that have a service-oriented mind or service-oriented skills to look at the aftermarket. The aftermarket is waiting for brains, is waiting for startups, to bring the aftermarket to the next level. And definitely it's something that you should not ignore, because it's a tremendous industry with tremendous challenges. So that's the advice I would give to the young, I would say, talented entrepreneurs in the room, is the automotive is a huge industry, but within the automotive, you have a service industry that today brings fairly short-term returns, is not very competitive, has entrepreneurs like us that are ready to help, and it should give comfort and a bit of, I would say, positive outlook to the ones that are in the room or behind the wall.
I would add to what you said, be very, very selective when you choose your investors. It's tighter than a marriage. It's really, really hard to divorce. You're stuck with your investors for a very long time. And choose choose the ones that can really bring you value. I mean, value can come in many different ways. One of the more important things is the product market fit. We talked about it before, you know, how important it is to launch a product that actually people really need it and would pay for it. And here, your investors, your strategic investors can help out. They can help you out, navigate into their organization. Investors could help you with a lot of decision taking throughout this. You know, it's a real roller coaster. I always admire the CEOs of the companies that we invest in. They're under tremendous pressures of decision taking all the time. And we, the board, we are the friends, we are the ones that can provide a very good and solid advice and really be very selective. You're stuck with us for a long time.
Yeah, I'll go a little contrary to that a little bit. Raise now, raise lots. In part because, you know, there's a lot of gray hair here that's been through several cycles in the automotive industry. And when they do go through cycles, they're usually the first ones in and the last ones out. And so capital preservation along the way becomes a key strategic priority for the industry. And that goes for not only the OEMs, but also the supply base. And so to the extent that you're selling into the auto industry or will be selling into the auto industry, who knows when the cycle's coming. It's been a long time, and we don't necessarily go into a cycle because it's been a long time. But to the extent that there is one, you want to make sure you have the liquidity. You want to make sure you have the stamina to last a cycle. And be able to come out the other side as a technology that is pertinent and available. And that goes for people, that goes for financing as well. And so I think it's right to the extent that you need to raise, take money when it's there, not when you need it. It's always, and this is from a past treasurer, it's always good advice to raise funds when it's there. I think the other thing that I would be, sort of thinking through, again, a lot of the products, and some of you have already pivoted to other channels that your technology that's clearly automotive based, but can also work in other IoT devices or other types of equipment. To the extent that you can start thinking through what those could be as a risk reduction to the overall business model, and being able to expand your sales channels into potential second businesses or third businesses while you continue to work in the automotive industry. The risk there is you take away from the auto, and you got to be careful you don't do that. But to the extent that your product does transfer to other either consumer or business related ideas, that could be a risk reduction as you go into a cycle.
That's very hard to add now after these very good comments, right? So I'm focusing a little bit additionally to what you guys have said on what makes a startup and why do startups succeed. I think it's very important to be laser focused and be very quick. So I always understand what is the problem in the industry with the incumbents that are there and how can you outplay them. And speed to market, innovation, but also always watch your back for other competitors. I think that's very important. This is also what the big organizations are looking for fast and nimble groups that can develop new things in a way that the organizations couldn't. And that's also a part of our investment thesis, to look for these very small, very smart, very fast entities.
Well, as my preparatory emails to all of you made clear, I could sit here and discuss this stuff with you for hours longer. In particular, though, I think that the advice that you were able to share with the founders that are here today was really especially valuable. And if you're listening to this, I mean, you're listening to a lot of really great experience here. Listen to what they're saying, take their advice. It's probably the best advice you'll get for free anytime soon. So. With that, I would like to wrap this up just because I know we're on a bit of a tight schedule, and rather than running late, I figure we could. No, I'll just keep talking.
I'm on now. Yeah,
There we
great.
go.
Well, thank you so much that was really fascinating.